What if I told you that many Americans legally overpay thousands of dollars in taxes every single year? Not because they earn too little, but because they miss simple tax moves before the year ends? The truth is, wealthy individuals, investors, and financially smart households often use legal tax strategies that average Americans completely ignore. And in 2026, with inflation still pressuring budgets and living costs remaining high, keeping more of your money matters more than ever. In this video, we'll cover 7 smart tax moves Americans are making before year-end in 2026 to potentially save thousands of dollars legally. Let's begin with one of the biggest opportunities. Number 1. Maximizing retirement contributions. Many Americans forget that retirement accounts can reduce taxable income. Contributing more money into accounts like a 401k or IRA may help lower the amount of income tax this year. And here's the important part. Many people wait until the last minute and miss the opportunity entirely. Smart earners are increasing contributions before year-end to reduce taxes while building long-term wealth at the same time. This strategy becomes even more powerful for higher-income households. Now, let's move to number 2. Tax loss harvesting. This is one of the most common strategies used by experienced investors. Here's how it works. If an investor has losing stocks or investments, they may sell those losses strategically to offset gains from winning investments. In simple terms, investment losses can sometimes reduce taxable investment gains. Many wealthy investors actively manage this before December ends. But average investors often ignore it completely. Of course, every situation is different, and tax rules matter, but understanding this concept alone can make a major difference. Now here's number 3. Tracking side hustle deductions. In 2026, millions of Americans have side income. Freelancing, content creation, online stores, consulting, gig work, AI services, digital products. But many people forget something important. Business expenses may reduce taxable income. For example, equipment, software, internet usage, office expenses, marketing tools, business travel, and other qualified expenses may potentially count. The problem is that people fail to organize receipts and records throughout the year. Smart business owners track everything early instead of panicking during tax season. And as more Americans start side hustles, this becomes increasingly important. Now, let's discuss number 4. Using health savings accounts strategically. Many Americans underestimate the power of HSAs. A health savings account can provide potential triple tax advantages: tax-deductible contributions, tax-free growth, and tax-free qualified medical withdrawals. That's why many financial experts consider HSAs one of the most powerful long-term wealth-building tools available. Some Americans even use HSAs almost like supplemental retirement accounts. But millions still don't fully understand how valuable these accounts can become over time. Now here's number 5. Charitable giving strategies. Many higher-income Americans strategically time charitable donations before year-end. Why? Because certain donations may reduce taxable income while supporting causes they care about. Some people donate cash. Others donate appreciated investments or assets. And increasingly, financially savvy households are bunching donations into certain years to maximize deductions. This is another example of how smart tax planning is often about timing. Now, let's move to number 6. Reviewing capital gains before the year ends. Many investors wait until tax season to think about investments. Smart investors review gains earlier. Why? Because selling investments at the wrong time may create unexpected tax bills. Some people strategically delay gains. Others spread gains across multiple years. Some offset gains with losses. Again, the goal is not avoiding taxes illegally. The goal is tax efficiency. That's a major difference. Wealthy people often focus heavily on keeping more after-tax income instead of simply earning more money. Now here's number 7. Checking withholding and estimated taxes. This sounds boring, but it can save people from painful surprises. Many Americans discover during tax season that they underpaid taxes all year long. This can create unexpected bills, penalties, or cash flow stress. Smart earners review withholding before year-end to avoid major surprises later. This is especially important for freelancers, business owners, contractors, investors, and people with multiple income streams. Now here's the bigger lesson most people miss. Taxes are one of the largest expenses many Americans will ever pay. Yet most people spend more time researching phones, vacations, or cars than understanding how taxes work. Financially successful people often focus on three things: making money, keeping money, growing money. And tax planning plays a major role in the second category: keeping more of what you earn. That doesn't mean using shady loopholes or risky tricks. It means understanding legal financial systems better. That's what wealthy households, business owners, and experienced investors often do differently. And in 2026, more Americans are starting to realize something important. A higher income alone does not create wealth. Efficiency matters. Cash flow matters. Investment strategy matters. And tax awareness matters. Now, one important reminder: tax laws constantly change. Everyone's financial situation is different, and professional advice may be necessary depending on income, investments, and business structure. But learning the basics of tax strategy can still dramatically improve financial decision-making over time, especially in today's economy. The Americans building long-term wealth right now are not just working harder. They're becoming financially smarter. They're learning how money flows, how taxes work, how investments grow, and how to legally optimize their finances over decades. That knowledge compounds just like investing. And honestly, this is one of the biggest differences between surviving financially and building real long-term wealth. If you enjoyed this video, subscribe to Smart Money USA for more investing strategies, tax tips, wealth-building ideas, and smart financial moves shaping America's future. And comment below: what's one tax lesson you wish schools taught earlier?